Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with a market update. The US dollar index slipped below 100 on Thursday, reaching its lowest level since mid-June. The Federal Reserve held rates at 3.5% to 3.75%, although three policymakers voted for a hike. That split highlighted growing disagreement over inflation risks. Markets subsequently reduced the probability of a September rate increase, putting further pressure on the dollar. WTI crude fell nearly 1% on Thursday, dropping below $83 a barrel after a sharp 6.6% rally in the previous session. Improved shipping activity through the Strait of Hormuz and continued diplomatic efforts eased immediate supply concerns. However, geopolitical risks remain elevated following US strikes on Iranian military targets, keeping oil prices highly sensitive to headlines. Gold climbed above $4,100 an ounce on Thursday, extending Wednesday's 2% gain. A weaker US dollar and escalating tensions in the Middle East supported safe haven demand. However, expectations of another Federal Reserve rate hike may limit further upside as higher interest rates increase the opportunity cost of holding non-yielding assets such as gold. The Japanese yen strengthened beyond 160 per US dollar on Thursday, rebounding sharply from a four-decade low near 164. The move may have reflected intervention by Japan's Ministry of Finance. However, high energy import costs, fiscal concerns, and the wide US-Japan interest rate gap continue to weigh on the yen, despite expectations of further Bank of Japan tightening. Euro rose to around 1.1535 during Thursday's US session, reaching a six-week high. The pair was supported by broad-based dollar selling, weaker than expected US second quarter GDP, and suspected intervention in the yen. Meanwhile, markets expect the European Central Bank to deliver further rate hikes, while the Federal Reserve remains focused on returning inflation to its 2% target.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.